Something really interesting is happening in the markets right now and most traders are ignoring it. While everyone is fascinated by S&P 500, Nasdaq, Dow Jones, there is a quiet rotation that happens right now and almost nobody is even seeing that. And let me give you a quick clue, guys. This is crude oil's recent volatility. And I'm not talking about crude oil. I'm talking about commodities that are seeing an influx of money because the money from the indices is rotating and this money needs to go somewhere else. So guess where it's gonna go? And this will be raw materials. Right now, there are two metals in particular that are starting to look very interesting. One of them is often called the metal with a PhD in economics because it tends to move when global growth expectations change. The other one has been absolutely crushed for the past couple of years, which means that even a small shift in demand could trigger very, very sharp moves. So let's start with the first one, guys. The metal with the PhD in economics is actually copper. And there are a few reasons why this market could get very interesting right now. First and foremost, the supply side is getting tighter. So what happened in the past 1 year is we've seen several major mines have faced disruptions and analysts expect global copper market to remain in supply deficit in 2026. Even though I don't really follow market analysts, I strongly believe that there is a confluence of factors right now. Because the second reason is that demand for copper is increasing right now, and as you probably know that this is a metal that is essential for electric vehicles, renewable energy, power grids, and even AI data centers, all of which require massive amounts of the electrical wiring and infrastructure. So from a third perspective, I strongly believe that we also might be at a inflection point because I'm seeing a few technical factors that are aligning with this bullish scenario. So let's have a look at what those factors are. From a technical perspective, copper has recently pulled back after its strong rally and is currently trading around the 580s level. In my view, this correction could potentially extend a little further into the 550s where we have a clear demand zone on the chart. If price reaches that area and buyers step in, we could see copper resume the broader uptrend. So we have two scenarios, guys. In scenario one, the demand zone holds and price could bounce from that level and potentially expand another 15 to 20%, pushing toward new highs. But there is also a second scenario to consider. And in this second scenario, if demand zone fails and we see a clean break below that, this could trigger additional short selling and this potentially could lead to a deeper correction. For now, however, I'm leaning slightly bullish, mainly because of the recent microeconomic developments and the early sign of capital rotation back into commodities. But copper isn't the only metal that could be setting up right now, guys. In the grand scheme of things, there is a second opportunity which might be even more interesting than copper. And because unlike copper, this metal has been absolutely crushed over the past years, I'm talking about something else, and I'm talking about palladium. At one point, palladium was trading for over $3,000 per ounce during the supply shocks a few years ago, but since then, the market has seen massive correction with prices dropping more than 70% from the highs, guys. And when a market experiences that kind of prolonged sell-off, it often creates the conditions for a potential reversal. From a macro perspective, palladium is heavily used in automotive catalytic converters, which means demand is closely tied to global car production and industrial activity. So if we start to see improving economic conditions or strong manufacturing demand, palladium could quickly move back into the trader's vision. From a technical perspective, palladium has already dropped roughly 30% from its nearest highs at 2150, but it's still a long way from the all-time highs at 3500. Right now, the key area I'm watching is the demand zone between the 15 and 1600s. If palladium is going to stage a meaningful move to the upside, this is the area where I would expect buyers to potentially step in. So scenario number one, guys, is the demand zone holds, and if we begin to see selling momentum weaken, which could open the door for a bullish higher leg. In fact, we're already starting to see some early signs that the downward momentum might be slowing. However, there is a second scenario. And in this second scenario stands basically if geopolitical factors, supply side dynamics shift, and we see fresh selling pressure entering the market, a break below the 1500s could trigger another wave of downside. And at this moment though, I see the probability slightly tilted in favor of the bulls, maybe 60 to 40. And of course, this is my personal view, guys. This is not a financial advice, so please consult with a financial advisor if you're considering of taking any further action. So overall, with this volatility in crude oil, we're starting to see more rotations and more possible scenarios where we can see money starting to flow towards more commodities and raw materials, guys. And if this rotation continues, markets like copper and palladium might see more people being attracted to them and more buying attention as well. And of course, these are just potential opportunities, but the market is the one that will ultimately decide which ones will play out. But if you're curious on how I find opportunities like that, how I structure and draw supply and demand zones, and I am able to limit the downside while letting the upside unlimited, I'll leave a link below, so I'm happy to walk you through the process. Other than that, keep an eye on the commodities space, because don't forget, guys, that the biggest movers come from the places where people least expect them.